Well, they missed the big picture. So, so nitrogen trifluoride is another one, NF3. And this is released in a lot of high-tech industries, those that are making electronics. And so we know how many gadgets and electronics we're making these days, how ubiquitous that is. So that particular greenhouse gas that's coming from that source is also getting a lot more attention. So I mentioned global warming potential, or GWP. Don't get too hung up on all of the details. This is only part of a much larger table. But greenhouse gases operate in a couple different ways in terms of how they differ from each other. So one way is their ability to actually absorb energy. So their radiative efficiency, in that first graph I showed you about radiative ability of gases to like trap heat or let heat pass through them. So that differs among the gases. And then also how long they stay in the atmosphere. So certain gases might stay, I believe methane stays in the atmosphere for like somewhere between 10 to 30 years is the rough estimate. I don't remember these off the top of my head, but some emissions like carbon dioxide will stay in the atmosphere for hundreds or thousands of years. And so that time commitment that we're making with these emissions is the part that's really making this a more urgent problem and something that we really need to address, because emissions that we are generating right now are sticking around for tens, hundreds, thousands of years, depending on the global warming potential of that particular greenhouse gas. So you can see the way that we account for those kind of characteristics of the gases is through this concept of global warming potential. And this doesn't have AR6 in it, but the most recent AR5 report, the IPCC report, puts carbon dioxide is always one. So everything is always in relation to carbon dioxide. It's our normalizing unit. And then methane is considered 28 times more potent than CO2, nitrous oxide 265 times more potent. And how this plays out, I'll talk through it in a couple more slides, but when we go to actually calculate and estimate our emissions, we will multiply the pounds or tons of these particular gases by their global warming potential so that we can put everything into common units of CO2 equivalent. So if you read reports about greenhouse gas emissions and you see metric tons CO2e or MTCDE is often abbreviated, or metric tons carbon dioxide equivalent, that's what it's getting at, is that it's actually accounting for other types of greenhouse gases, but they're put into these common terms of carbon dioxide based on their global warming potential. Stop me if anything's like really confusing, because I'm going to try to go through this relatively quickly. So why do we measure greenhouse gases? There's a number of reasons, and as we mentioned, I was talking about somebody, this is coming up in a lot of different sectors and different professional roles now. First and foremost, we want to understand what are the sources and what are the quantities of emissions that a particular entity might be responsible for. So that's first and foremost. We also do this so that we can set targets. It's great to know how much we're emitting, but we are probably doing so that we can set a target for reducing those emissions. Estimating potential reductions, and that might be at a project scale or programmatic or a sector scale. Tracking progress over time. We don't just do this once, we go back and remeasure and see how we're doing. Reporting out, and that can be for the purposes of public transparency. Increasingly, that's the case. Regulations, there's more and more regulations coming out around managing greenhouse gas emissions. And also just inspiring additional action, being able to report out and inspire folks. And I'll talk about a couple different forms of greenhouse gas accounting as we go further through, and the different ways that we may inspire folks to address greenhouse gas emissions. And then finally, as our both voluntary and hopefully getting to be more regulated carbon market is something that different corporations or different entities can participate in, we need to have an accounting mechanism for the baseline greenhouse gas emissions, as well as particular projects or systems that might serve as offset projects that people may want to pay to offset their emissions by investing in reductions elsewhere. And so that's another reason that people may engage in accounting. So I almost hate saying this phrase at this point because it's like such an old adage, but you can't manage what you don't measure. It's not always exactly true, but it's relevant in this instance. So greenhouse gas mitigation requires managing the things that cause greenhouse gases, not, at least usually, direct sources. So we know about sort of atmospheric concentrations of greenhouse gases from measurements that are done at Mauna Loa in Hawaii, where they actually are measuring atmospheric carbon. That's probably one of the few examples where we're directly out there with actual sensors or measurement tools, measuring concentrations of greenhouse gases. Most greenhouse gas accounting happens by using activity data and making lots of estimates and assumptions and calculating based on that activity data. So it's not ever, and this is always disappointing to my students, it's almost never a perfect calculation of greenhouse gas emissions. We are kind of estimating based on a number of different factors, emissions factors, and activity data that we collect. There's also different approaches depending on the questions we're trying to answer. So I'll get into a little bit about sort of production versus consumption-based greenhouse gas accounting, as well as you've probably heard of life cycle assessments, where you're looking across the full life cycle of a product. There's project-based greenhouse gas accounting that happens, where you're trying to measure reductions from a particular project. So there's all kinds of different ways you can approach this, depending on the question that you're trying to answer. And I'll come back a little bit later to that piece. So a greenhouse gas inventory, and a lot of greenhouse gas accounting, we're talking about doing an actual inventory, is really a list of emissions sources and their associated emissions quantified using standardized methods. This is actually an EPA definition of a greenhouse gas inventory, pretty standard. So how do we do that? What are these sources that they speak of? How do we identify which ones we include and don't include? So starting sort of global scale in terms of emission sources and sinks, so where we're actually absorbing carbon. This is from Project Drawdown. I just really like this graphic, and it shows the sources of emissions, sort of broad brush categories of sources. Electricity production, so we produce emissions in generating electricity, unless it's clean, renewable sources, because to produce electricity, we're typically burning coal, oil, gas, sometimes biomass, something like that, but often burning fossil fuels in the generation of electricity. So that's one source. Food, agriculture, and land use. So emissions happen in agriculture, equipment, obviously. Nitrogen applications can produce emissions. Actual turning of the soil releases carbon that's stored in the soils, and that's where land use and land use changes have a big impact, because you may be cutting down trees or other vegetation, which is storing carbon, or making changes to our land and soil that is storing carbon. So there's sources coming from that. Industry, a lot of industrial processes. Cement is a big one. Other kinds of manufacturing that generate a lot of emissions, in addition to the actual power that they're often using. Transportation is a big one. And again, these are like at the global scale. If you look at US-based emissions, you'll see transportation is a bigger chunk of the total. And in many nations and in subnational settings, transportation ends up being a pretty big chunk. Same with buildings, actually. So buildings, in terms of again, energy that we're using. What I'm not going to get into tonight, but is becoming a more common topic, could be a whole other session all on its own, is the concept of embodied carbon. We'll get into it a little bit in the concept of life cycle emissions, but when they talk about buildings in this context, they're not actually even accounting for the process emissions associated with like building materials and the embodied carbon. And then we do have land sinks and ocean sinks that and coastal natural habitats that serve as sinks. And I highlight this not because they're an emissions source that we're quantifying, but it's so critical that we keep preserving these. We have to hang on to what we have in order to keep absorbing some of these emissions sources that we have. Another, this is actually from the Global Protocol for Communities, which I will talk about a little bit more in a few minutes, but this is a list of some of the sectors and subsectors or types of sources of emissions that you might have in a urban setting, in a city setting. So again, stationary energy from residential or commercial or institutional buildings, again, manufacturing industries, energy industries, agriculture, forestry, fishing as well. Fugitive emissions, again, from various activities around mining and processing. Fugitive emissions from oil and natural gas systems as well, and transmission and distribution of those things. Transportation, I mentioned before, and we're talking about actual vehicles, but we're talking about railways, we're talking about boats, we're talking about airplanes is a big one. I think there's an aviation session. I'm not sure if that was today or tomorrow. Today. It was today. So I'm sure you heard lots about investment in alternative fuels for aviation, hopefully. And also off-road, there's like so much other equipment, transportation related equipment that's out there burning fossil fuels in order to make them run. Waste is also a big source. And that happens in terms of like landfill, where you get methane emissions from the breakdown of materials in a landfill setting, but also incineration and open burning, and then in wastewater treatment. And I am not getting into the weeds of any of these and how you calculate them, and you do not want me to tonight, because these get really complicated because it's all dependent on the makeup, the composition of the waste or the wastewater, and also how it's being treated or broken down. But you have all kinds of emissions that come from that. Industrial processes we talked about before, and then one of my favorite acronyms, FLU, for agriculture, forestry, and other land use. So that just gives you kind of broad brush idea of like, where are these actually occurring, these various emissions. And then I just like to, I kind of mentioned this already, but just re-emphasize this idea of like calculation versus direct measurement. We are calculating emissions based on actions, activities, and we calculate these estimates based on, like I mentioned before, activity data, and that might be direct data from a utility providing us actual consumption of electricity, natural gas, or it might be estimates that we make based on other types of activity, like how many people live in a particular area, and estimated traffic counts, and we might get like large scale aggregated transportation data from in that way. The more specific we can get, the better, but sometimes we have to make some high level estimates. And then we use that in combination with emissions factors, as well as that global warming potential that I talked about. And those key features, the most basic version would be activity data times emissions factor times GWP equals your total emissions. It's more complicated in some sources, but that's the basic concept. When I talk about emissions factors, those can vary. So for example, when we talk about electricity, we would multiply kilowatt hours or megawatt hours of usage, of consumption by an electricity emissions factor in order to get our greenhouse gas emissions from electricity consumption or generation, depending on which end you're looking at. And the emissions factors for electricity vary. So you may have, you may be able to go to a utility directly. You might be able to go to Eversource and say, hey, based on your mix of fuels that you use to generate electricity, like what is your per kilowatt hour emissions factor? They might be able to tell me that. Alternatively, and what often gets used is, especially here in the US, the EPA has what's called E-grid factors, and they're based on region and subregions, where they have taken stock of the grid as a whole in each of those regions and what the general mix is. So the emissions factor for electricity in California, for example, where there's a lot of hydro and a lot more solar getting into their generation mix versus West Virginia. West Virginia's emissions factor per kilowatt hour is going to be much higher. So that's where you would end up seeing, you might have the same quantity of kilowatt hours and you might have much higher greenhouse gas emissions, just depending on what that source is. Hopefully that makes sense. All right, so some of the key steps here. So first and foremost is to choose a standard or a protocol that you would use, because nobody memorizes all of the numbers and emissions factors and formulas and calculations. Nobody does that. You're always going to go back to a set of resources, such as a greenhouse gas protocol. There are lots. Some are sector specific, some are for cities and towns, some are for national scale, some are for corporate scale. And there are many, many to choose from, but yes.
Could you just throw out some names so I can go home and look some up?
Yes, and I'm trying to remember if I included my slide that includes some, but a couple that we're going to talk about are the GPC, so it's the Global Protocol for Communities, and that's for basically for municipal scale, community-wide inventories. There's also what I call an oldie but a goodie, the Local Government Operations Protocol. Hasn't been updated since 2010, hasn't needed to be. And then there's the Corporate Protocol. And if you go to WRI, World Resources Institute, and just like search greenhouse gas protocol, you'll find a ton. There's a bunch. Now they have different ones for different scopes. They have a whole scope 3 one. Airport industry has an aviation focused protocol. You can find them for all kinds of different sectors and types of sources.
Thank you.
Mm-hmm. If you need a longer list, feel free to reach out to me after. So that's where you would start. Based on what entity you're working with. Are you doing this for a business? Are you doing this for a city? Are you doing this for Tufts University, which we did last fall? You would choose a different protocol. And then you would establish your boundary. And there's different decisions that get made. The protocol will provide some guidance for you on that. And I have another slide that's going to touch on that a little bit, but is it a geographic boundary? Is it based on operational or financial control of an entity? Those are some decisions that you would make and would include different things based on that boundary decision. You're going to determine a baseline year, and it needs to be a complete calendar year. That is just like fundamental to any greenhouse gas accounting. If you're going to do an inventory, you're going to have a full year. We don't do partial years of data. Sometimes you have to use a partial year and extrapolate in order to get a full year, but you'll use that baseline year. You want it to be the most recent for which you have available data. So we wouldn't right now do an inventory for 2023 because we don't know all the activity happening in 2023. We could maybe, fingers crossed, do a 2022. But even right now, we may not have all the data available to us for 2022, but we could reasonably do a 2020, 2021 inventory right now, in most cases. Then you collect your data. seems small on the page, but probably the hardest and most complex and time-consuming step is your data collection. Last fall, I taught this class for which Emma was a TA, and I warned everybody that this was going to be how it went, but we were trying to do an update to Tufts greenhouse gas inventory, working with Tina in the Office of Sustainability, and the students spent most of the semester collecting data, and still we didn't get everything we needed, and there's still some updates that are happening right now. So it can be very time consuming because you're dependent on other people, you're dependent on whether those people keep good records. It's really a complex piece of the pie. Then you calculate. This is actually the easy part. You've got a protocol that has references to the formulas you would use. A lot of the calculations are actually quite straightforward, especially when it comes to energy. They're actually quite straightforward. It's like, if you have utility data, that's the easiest thing to calculate. Yeah, as long as you have it, getting it's the hard part. Throughout, this is listed as a sequential process, but really throughout this process, you're going to document any assumptions and any methods that you're choosing. And it's so critical that you do this because somebody else is going to come back and try to do this, do an update to it later, or figure out what assumptions did you make about what was included in these waste calculations. And you're going to need to be able to go back and track it down. Then you summarize and report it, and hopefully also track your progress and update your inventory over time. So those are kind of the key fundamental steps of doing a straight inventory. There are some common greenhouse gas accounting principles. You'll see these listed in most protocols as well. Relevance, so again, selecting the boundaries and the activities that make the most sense for what you're trying to accomplish with your inventory. And when it comes to that, you're really just thinking about like, what's going to inform your decision making. If you're trying to inventory your emissions in order to set some reduction targets and track progress over time, but you're not going to have the means to update a particular sector of emissions every 2 years or every 5 years, if you're going to have to like make guesses and estimate it based on all the same factors so that you end up with the same number, it's not going to be that useful for you. So that's where you may decide to leave certain things out, or maybe it's such a small piece that, I'll give an example. For Tufts University, refrigerants is a source of emissions, fugitive emissions. It's really hard to track refrigerant data. It's all about what's put into an air conditioning unit and what's taken out and what potentially leaks, how it was handled. Those records are not often well kept. That's not unique to Tufts. And so, and it's also probably a fairly small source of emissions for Tufts compared to everything else, transportation, all the buildings, the energy use, everything, waste, et cetera. So Tufts has historically left that piece out. That's a decision that gets made. Does that mean that the inventory is incorrect? No, it's just one of the many decisions that gets made about what's most relevant, how complete can we make it, but also balancing that with accuracy and consistency. Can we track those records over time? So thinking about that, are we going to be able to apply the same methods over time and compare and track over time? Are we able to provide a clear audit trail of the process when we're collecting this data? And how accurate can we be with it? If there are so many layers of uncertainty built into what we're collecting that we don't really feel like we can trust it. This has happened with too often for me doing like air travel emissions calculations. If you have to make so many estimates based on if you're using cost data, for example, maybe I've worked at a company where I was only given numbers of how many dollars were spent on tickets for air travel. That tells me nothing about the distance that was flown, what kind of plane, any of those details that would actually give me a really good sense of air emissions. So it becomes such a rough calculation that you have to make the decision whether it's worth including, and am I able to actually make any different assumptions or collect anything different a few years from now to show, oh, we've reduced over time or it's gone up over time. So these things often are at odds with each other and there may be trade-offs between them, but ideally we're trying to balance these principles as we collect our data and make our decisions about our approach. So I talked before a little bit about boundaries and how we select those. So there's this concept of production-based accounting versus consumption-based, or what might be considered sort of a territory geographical approach versus a footprint approach. So some of you may have taken one of those like personal footprint tests online. You can do your own personal greenhouse gas footprint, figure out what your personal emissions are. It's that same idea, and we can do that at sort of a larger scale as well, for an entire jurisdiction through something called consumption-based accounting. I'm going to talk a little bit about that. It's starting to emerge more and more as a method that gets used for greenhouse gas accounting. It is definitely not the norm. Typically, we're talking about a territory approach or a production-based approach to greenhouse gas accounting. Inventories that you see, Massachusetts statewide inventory, United States national inventory, these things are all kind of a territory approach or a production-based approach. But I will give you a couple examples of consumption-based. We also have organizational boundaries instead of geographical boundaries sometimes. Time span I talked about already, the single year, but in a life cycle assessment, we might be looking at emissions that are occurring at different times. Might not just be within a single year time frame, because we're looking at end of life, we're looking at extraction, that might occur over many years. Which gases are you including? So I listed those kind of like top 7 before, but some inventories may only include CO2, methane, and nitrous oxide. There's decisions to be made on that front. And then which sources to include, and I talked a little bit about that already. So, have people heard of scopes before within greenhouse? This is probably the most difficult aspect of greenhouse gas accounting to wrap your heads around, because it really serves a purpose for reporting more so than the direct accounting itself. So it doesn't necessarily influence how you're calculating emissions directly. It really only influences how you're reporting them out. And the reason that we have them is primarily to avoid double counting. So it's this idea that we're trying to recognize that there are different levels of shared responsibility for emission sources. So if I am consuming energy at my home, let's be more specific. If I'm consuming electricity at my home, I am responsible for the electricity use, for that demand from electricity that's getting generated at a power plant. But the power plant itself is where those emissions occur. So there's no direct emissions happening at my house from electricity itself. It's the same reason people say cars, electric vehicles are net zero. Technically, electricity has emissions associated with, but there's no tailpipe emissions happening, right? So that would potentially be confusing when we go to report, right? So do I claim those emissions, or do they really belong to the power plant or the power facility, or to the community where that power plant is located? So that's where things get a little bit confusing, and we try to avoid that sort of ownership or responsibility by developing this scopes framework. So in that example, electricity consumption is typically considered a scope 2, and electricity and steam actually consumption are pretty much the only things that you will find in scope 2. There may be rare exceptions to that I wouldn't even attempt to get into tonight. But generally speaking, when you hear about scope 2, you're talking about consumption of steam and electricity. Or like, yeah, I'm not gonna get into the other examples. But the electricity generation is somebody's scope 1 emission source. And then when we talk about scope 1, we may also be talking about those direct emissions from things like vehicles, or the direct burning of oil in homes that are still running on oil, or the direct consumption of natural gas. So those fall in that sort of direct scope 1 category. And then scope 3 covers a lot of things that may occur outside of the boundary, but are happening due to activities within the boundary of that entity, whether we're talking about organizational or geographic. So if I am responsible for generating a bunch of waste here on campus, that waste may get disposed of and incinerated or landfilled in another community away from Tufts. And so that would be considered scope 3. But that community where that waste is getting treated, either landfilled or incinerated, that would be their scope 1 emissions. Sort of makes sense. It's okay if it doesn't make 100% sense. It takes time to wrap your head around it. Yeah.
So, okay, makes sense to me. So when you're doing like territory-based GHG accounting, for example, aren't these emissions being double counted? Like, doesn't that create more of a problem if someone's scope 1 is someone else's scope 3?
The idea is that you report it as a scope 1 or a scope 3. You're not trying to add it all up. So you wouldn't try to add Boston's accounting of its emissions to the Massachusetts statewide emissions. It would be more like you could count like some of it as a subset, but
I see.
That's why they've developed this scopes framework, is so that you can report and be clear about who's kind of responsible for which piece. And if this other inventory reports it under a different scope, it's okay, because you're not trying to add them together. You are right to raise this question, and that it makes it complicated to understand how we total up emissions overall. And it's because we do it kind of separately. We're not trying to add each community's emissions together. We would then take a more national level scale or global scale approach to the accounting.
I see.
Yeah.
When people talk about like supply chain emissions, is that mostly like scope 3, a combination of scopes 2 and 3, or like?
It's mostly scope 3. And I have this note here that historically there's been a little bit of an implication that scope 3 was really, if you're feeling ambitious, and particularly I'm talking in the private sector. So for corporations, businesses, they have historically not been required to report scope 3 emissions or even account for them. It's a huge problem because we're undercounting a lot of emissions in that sense. And there are emissions that like nobody's really accounting for anywhere else. There is some traction now to start to account for scope 3 emissions more, and some push to actually require it among corporations. If anybody's following the SEC regulations that are going to be at some point actually finalized, that's been a central point of the debate, is whether to require scope 3 emissions reporting among corporations that have to file with the SEC. I would say, yes, we need to be pushing that harder, in my personal opinion. All right, I have a couple other visuals and explanations just to really hone in on this scope concept. So this graphic is more focused on in a city context, a community context. So this is from the GPC, again, that global protocol for communities. So this shows, like, if you were to take that table I showed you before with the different sources, this shows like kind of where they land in the scopes. Some of it depends. So for example, the waste and wastewater I talked about, it depends. Like, do you actually treat your waste or wastewater within your community boundary, or do you send it somewhere else? That'll factor in whether it's a scope 3 or a scope 1. Sometimes it's both. That gets a little confusing. Scope 2 is your grid supplied energy, your electricity source. Scope 3, we have out of boundary transportation sources, but then we have any industrial processes that are located within the community, any agriculture, forestry stuff happening within the boundary, stationary fuel combustion, and in-boundary transportation. Hopefully a little bit more straightforward on that graphic. It's a little easier, at least for me, to think about it in a community setting, because you can think about an actual physical boundary versus when you get into corporations that may have subsidiaries and multiple different entities at play, and you have to make decisions about whether it's a financial control or an equity-based approach, just all of these kinds of complications. I'm going to skip this because I've kind of already described it, but another table that kind of shows how the scopes work and what might be included. So I mentioned before, the corporate protocol is what it's often referred to as. It's a corporate accounting and reporting standard, greenhouse gas protocol, but generally shorthand is called the corporate protocol. And with this one, it's really for, again, corporate entities. Again, you'll make a decision about that sort of equity share, economic interest approach versus like operational or financial control. This particular protocol says companies shall separately account for and report scopes 1 and 2 at a minimum. So there is a whole separate protocol now that has been released for scope 3, really encouraging folks to look at scope 3. Scope 3 is covered in this, but when they talk about reporting requirements, they're not in this standard, not necessarily pushing scope 3. And this thing was originally written a long time ago. Even this revised version is a little bit old at this point. And then it talks about it, the base year and how you select that. I'm not going to get into the weeds of all of that. And then I mentioned before the global protocol for community scale greenhouse gas inventories. And again, this, I won't get into the weeds of all of this, but you can look it up. And if you want a good sort of introduction outside of this very brief session tonight, read through these couple of protocols. So they're a couple hundred pages each. Don't necessarily read the whole thing, but if you read like the upfront material within them, they'll give you a good overview of some of the things I've talked about as well, if you're trying to get into understanding some of these concepts a little bit more clearly. All right. One other, if scopes wasn't confusing enough, one other concept I'm going to mention just quickly is this concept of biogenic emissions, meaning that these are coming from natural sources. So in carbon accounting, and again, when reporting is the important piece here, they distinguish between fossil fuel-based carbon and carbon that is coming from living matter. That's called biogenic sources. And so we account for all of it in the same way, but when we go to report it, we usually report biogenic separately, and some entities will like say they're not going to include it in their total. That's a choice, because the idea is that biogenic sources of emissions will occur at some point anyway, when that material dies or decomposes or burns or whatever. Only issue that I have with this is it's a little bit misleading sometimes because there's this time factor and this urgency that we talked about, and we are making these emissions happen now versus maybe 10 hundreds of years down the road. Yes.
I have a question online, which is that if the protocols mentioned before, so corporate and local, get revised, are the emissions between the entities comparable? I'm assuming like from before the revision versus after, or what does that look like?
Yeah, usually when protocols get revised, they're providing more clarity about things that aren't clear. They're accounting for maybe changes in emissions factors sometimes. Yeah, they're still going to be comparable. I don't think any of these are going to like totally upend their approach to scopes or the calculation process or any of that kind of stuff. It's really usually more about clarifying terminology or including some source. Like I think one of the revisions that's happened has been the addition of NF3 that I mentioned before, as a greenhouse gas that needs to be considered, stuff like that, but it's never any like major overhaul of the approach to in such a way that you wouldn't be able to still use it and compare your progress over time. Good question though. All right, I think I'm going to, I only have a few minutes left and I want to make sure there's like 5 minutes at least for questions. So I'm going to talk quickly about production and consumption-based accounting. I have some stuff about like target setting and life cycle stuff, but I'm just going to skip that for today, but happy to talk with folks another time. And my slides will have it if folks want to take a look at it. So I mentioned before that the kind of different questions and different objectives behind the greenhouse gas accounting will require different lenses, different approaches. So this just kind of is an interesting flow chart that talks about sort of this idea of attributional methods, kind of the ones I've been talking about, right? Those production-based accounting methods where you're doing citywide, community level inventories, national inventories, corporate scale inventories. And then there's this concept around sort of consequential methods where you're thinking about, okay, this particular project or product is generating emissions, this project level accounting or consequential LCA. And this is where we get into this idea of production versus consumption-based accounting a little bit. And I know there's a lot on the screen, don't worry about it too much. But the idea here is that in a consumption-based emissions inventory, you're going to estimate emissions associated with activity of all of the residents' consumption habits. So it's equivalent to that sort of personal carbon inventory that you might do online, except that you're calculating it for all the households in a jurisdiction. So this graph that you see is for King County, Washington. They're actually like one of the first places that did a consumption-based inventory at this scale. And the interesting thing is when they did this approach versus just, they did both. They did a sort of traditional community-wide inventory. It's like, I can't remember the exact numbers, but it was like nearly double the emissions when you start getting into what are all the things that people are eating and buying and consuming, because you start thinking about all those emissions occurring elsewhere that may not be accounted for when you're just looking at the sectors that are in existence in a community inventory. So that's, and there's different ways to do it. It can be sort of like a survey-based approach where you're kind of asking people what are their habits. There's also ways to kind of model it based on various kind of income, vehicle ownership, things like that.
Thank you so much.
Sorry. Again, lots of words on this page, don't stress too much about it, but some argue that this is a more complete estimate of a particular actor's emissions. Arguments both ways on that. Seattle specifically used the results of its consumption-based inventory to generate a list of specific actions that residents can take to reduce their emissions. So sometimes these community-wide inventories feel a little bit like out of reach for the individual, like, okay, well, maybe I can like drive less or something, but how does this really impact me? And I do a lot of climate action planning for communities, and I get more and more requests to do these like residential climate action toolkits, right? What are the specific things we can do on an individual level? And this type of accounting kind of helps people connect it to, oh, here's my own personal contribution, and here's how all of us as a community are making changes to our atmosphere based on our consumption habits. So this is becoming a little bit more popular. It can help cities also target different kinds of consumers in different ways. So you may start thinking about that from like an equity lens when you're thinking about those behaviors. One of the challenges and one of my hesitations around consumption-based accounting is really just that it does require a different level of analysis. It's much more granular set of data that you're going to be trying to find. So staff time costs may be challenging to not only do once, but to replicate, and then to also make that comparison over time. Like I mentioned before, if you're surveying people on their consumption habits, to have to then go and survey them again or base it on assumptions around demographics in a community that those numbers may not get updated on a regular basis, it may be hard to keep up with this. So maybe it's good as a snapshot opportunity, again, to engage individuals, think about consumption activities as part of the challenge that we're all facing, but maybe still important to rely. Most of the communities that I've seen tackle this still do a sort of territory-based approach as well, the production-based accounting approach as well. So I think I'm going to stop there because we're almost out of time, and I'll answer any final questions. Like I said, I did have a little bit more content, and I'm happy to share all the slides, and people can reach out to me. Yeah, I'll go to the last slide that has my info. And I thought I was going to cover a lot.
Yeah, thank you so much. That was so helpful and informative, and I definitely want to learn more. I'm curious about the experience that you were referencing and what you've been seeing as a practitioner. Like, is it becoming more common for organizations or companies to bring the really technical aspects of carbon accounting in-house, or do you think that a lot are still looking at having someone in-house who knows the basics, but then outsourcing to like technical consultants and consulting firms?
I know this is the worst answer that everybody hates. It depends. So in the corporate sector, so among businesses, I think there's a lot of like life cycle assessment accounting happening. There's a lot of like developing either in-house or procuring tools. Businesses tend to have more resources to buy a tool that they can plug in data and it calculates it for them. These tools exist, and especially more so than when I first started doing this many years ago, and I was literally looking through receipts in a shoebox. Not exaggerating. Yeah, and even like here in the greater Boston area, MAPC, for example, Metropolitan Area Planning Council, they actually have a greenhouse gas emissions accounting tool that local governments can use, has a lot of the default factors and assumptions you would need from this area, right? How is our wastewater treated, the local emission, electricity factors, all of those kinds of things, so that like I'm working with a community right now, very limited budget. They just use the MAPC tool to do a very basic rudimentary inventory. Now, immediately they started getting questions as we started the climate action planning process of, well, what about our trees? What about our urban tree canopy and our forestry? And so as things get a little bit more complex, or there may be a specific area that they want to do a little bit more fine tuning around their accounting, then they'll probably bring somebody in to help with that. And the same would go for a company as well. There may be, if you're creating a certain product and you want to figure out a way to make that product with a lower footprint, you might start to bring in a specialist to help you figure out where can you start to improve the efficiencies or make some changes there. So depends. There are more and more companies that are building entire teams though that are doing ESG inclusive of greenhouse gas accounting. Yeah.
I just want to say it was a great presentation. I used to work with the Sierra Club on the Young Coal campaign, and you broke it down really well. I'm really tired and I deserve to be talking about it. And just to raise a question, I mean, I happen to connect because I'm doing grassroots work, especially around global issues. We got an election in Nigeria that was like basically stolen, and today there's social movements. Reminds me of Tahrir Square a little bit in Egypt right now going on. So I came over to meet the Nigerian professor. We're going to do like a community event in Somerville raising these issues. And there's a lot of intersectionality, I guess, on this issue. You know, a quick pitch, so I'm spreading the word. I mean, when you're coming to like something like Nigeria, where I'm just starting to learn, I don't know much about the place. I mean, probably Chase Manhattan there, ExxonMobil, you know what I mean? That's a huge issue. But as we think about this globally and the fact that corporations really are running Nigeria and petro states and whatever, narco states.
Yeah.
I mean, huge topic, but breaking it down simply, I mean, that's something tough. So I don't know much what you're doing, but like, it's beyond the nation state. The United Nations, I mean, definitely the US doesn't play a positive role in what's ever going on there. So break it down simply, if you guys started to do that work with, JP Morgan Chase, or,
Me personally.
Well, it's a big picture question, but the
Yeah.
intersections are here today, right now, so. like-
Yeah, no, I mean, I think that the very simplified answer, because I don't have a bigger picture answer for you, is that there's movement in the right direction. People are having the conversations, and there's also going to be more and more pressure, whether that's regulatory or coming from consumers, to address these issues, and we have to tackle this. We see the numbers. If we don't, we're gonna have much bigger things, much bigger fish to fry.
I mean, and it's really is youth. I mean, last thing I'll say is like, I have a daughter who's 60, she's trans youth. I'm working with a young person in Nigeria. Part of what we're gonna do in the summer community event is really elevate the voices of the young people who are making the change. They're here, they're in Nigeria, they're everywhere, so.
Yes.
And in the meantime, let's not exhaust them and put everything on their shoulders.
Exactly.
People our age need to do the work too. Yeah, I know we have Rebecca, right?
Yeah, so
I was about to-
Rebecca's actually, I don't know that she's here yet, but I just wanna maybe give like one or 2 minutes to wrap up, and then we have to move on to the next workshop, unfortunately.
I saw your hand first. No.
I just have a very basic question.
Sure.
Right now, we're receiving these mails saying that we have the option to convert from traditional energy supply to the clean energy supply.
Yes.
I'm just a little bit confused because we didn't change any of our equipments.
Yes.
And how does that happen that by signing up, we convert it to clean energy?
Yes. So first of all, double check with your municipality and make sure that the piece of mail you're receiving is real. There's a lot of spammers. There's a lot of scams going on out there. So always double check. But there are a lot of community choice aggregation programs popping up. So it is real. And what they're doing is they're actually getting suppliers to provide at a cheaper rate than you would otherwise be able to afford this renewable energy sources. So it is a legitimate approach. It's a little bit like offsetting, but not exactly. Sorry, we're just wrapping up. Yeah, it doesn't involve you having to put solar panels on your roof, but you can actually get the clean energy from a lot of the ones happening in Massachusetts are getting wind energy from elsewhere.